All right, good morning, everybody. So, the energy crisis continues. More uncertainty out of the Strait. Markets gap down a little bit, but we're still inside days, so we really haven't broke anything yet. We don't have a lot on the economic table this week, all things considered. So, markets are down a little bit, but since they're not broke, we're really just holding the line to see what sort of news we get through the day today. As you can see, looking at Market Watch, we don't have any big economic calendar events for the US on the docket. If we did, this is where it would show up. Now, FX Street is different than Market Watch because it's looking around the world and it will look for smaller, more nuanced economic calendar. Market Watch is all right if you just want to look for the big US stuff, but it doesn't get anything globally and it doesn't worry about the smaller bits. So we got some auctions today at 11:30. These are right up front. They usually don't move the market. I wouldn't discount them, but they're really not the one that I'm focused on. Everything right now is focused on that energy crisis. So we can continue to look at what the Fed is doing or what the market anticipates the Fed is going to do, whether they are pricing in a pause, a hike, a cut. We can see it. So we want to continue to circle back to this once or twice a day just to make sure things aren't moving radically. You will see movements 1 or 2 points up or down. It's not really a big deal. If you see large position changes in here, 25% or greater than that, that would indicate a dynamic shift. Otherwise, it's just noise, not really too much to pay attention to. We've been saying now for a couple of weeks that growth versus value and Mag 7 complex and market breadth are not in control of this market. Dealer positioning, hedging flows, they make a little bit of impact always, but they're not the number one driver at this point. VIX and crude are, and that hasn't changed today. So regardless of what's up this morning or what's down, you want to continue to focus on the VIX and crude as your number one driver of what's moving the market. I can't argue with you, Iron. I can't argue even a little bit, right? The power of a cell phone. But I'm not looking over his shoulder, so I'm going to have to just make do with VIX and crude. I guess it's still better than those astrology traders. Not that I'm throwing stones. I just can't imagine trading that way. So, looking at what we've got coming out of the White House today, it's low risk at the moment. And markets are still shown as risk on. I think that still needs to update a little bit, but it's based on a couple of different things. The CNN Fear Greed Index, positioning in the S&P all-time highs, blah, blah, blah. There's a whole list of them. They add up to suggest that markets are in a risk-on sentiment. And yeah, I mean, after gapping down last night, we moved up. We didn't continue to move lower. We got nothing this morning other than the market jitters waiting on some insight on where we're going from here. And while I see a lot of people who suddenly think that they can anticipate Middle East war and anticipate what's going to happen next, I will continue to sit out and continue to say, you don't know anything, right? You don't. And I'm not pointing any fingers, but guys, if it's in the news, then it's what the government let get reported, and they have a bias. So you don't know what's going on any more than I do because we're not over there, and everybody's just lying and getting away with it. So you cannot anticipate the outcome of this. Just sit back and wait for a move, and if you want to speculate, jump on it. I don't know what else to tell you. You're not going to second guess the outcome of this crisis. Someone asked what I was looking at the other day, when I bring up this. If you look at the top, it says roll call. So you can just go to the roll call website. Across their top, you got fact base, White House calendar, White House releases, the president's tweets. I'm not signed in. I don't have an account here. I didn't buy anything. You can just go to roll call and go to fact base and then choose the president's public schedule. And I just use this to kind of back up this, right? That's it. It's just nice to know we're getting validation from multiple sources of data. All right, the call wall rolled up again into a level that looked new, finally, after the gyrations of rolling up and down and up and down in the same area. It finally broke into a new area, 72.38. So it's a bit over our head, higher than Friday's high. We'll see. If we're going to get there, we got to get through Friday's close and then Friday's high and then expand beyond that even more. It's doable. Just where's the fire going to come from? 92,000 and a half for the overnight. The average here is around 50. So significantly higher than the average, but 92 still feels a little light compared to what we've seen, in the past month. I'm not ready to give away my 50,000 average overnight and move that number up because I've had that number for years. And sure, if I shorten my time frame and look at, say, the last month, 90 would probably come in a little below average. We've seen some big numbers, consistently big numbers. But I'll just look at this and say we had really good overnight participation. They weren't sitting out. When I first started using this overnight volume, one of the things that I used it for was to help me find if something happened in the overnight or if somebody was missing from the overnight, right? I'm a typical American. I barely keep track of our own holidays, let alone some other country's holiday. And so when I was newer to trading, I would say not notice that Europe had a holiday or that China was closed for a holiday for the whole week until it was half over with, right? So I was using this way back in the day to spot if there was a lack of participation in the overnight. Then I started using better tools like tradinghours.com and thinking like that so that I was able to anticipate and understand when those markets were going to be closed before we got there. And so this tool doesn't have as much value as it used to since we can go to that other site. But looking at the overnight participation still proves to have a little bit of insight on whether or not they got any work done, if they even tried to get any work done, if they just sat out or not. Now, of course, you take that number as a starting point and then apply TPO or volume profile and really get some clarity on where this positioning is located. But it's just a good start, right? It's a nice overview of kind of activity did we get last night. It's the problem with candle-based charts on time rather than tick, right? You're going to get a new candle whether or not you really had any trading activity or not. So last week we talked about the lower high possibility, which we never got, and the higher low possibility, which we're still waiting for. So we never pulled back and set a lower high. We just ran from the lows all the way up, broke out, and then some. So now we've got a higher high. Yay! We still need the low, right? This is unprecedented market activity. And at some point, we still need the pullback. So we still need that higher low. It's very likely, unless we're crashing down, that the pullback is going to come into this 78.6 level. Now this isn't a game of perfect. It can overshoot that level in a wick. We're just looking for it to get there, maybe overshoot it, maybe not, who cares, but stabilize around that level and then continue its move to the upside. And that would be our good, clean, decent, measured move pullback. If it doesn't stop there, then we're going to the halfback, which is this yellow line down here, 67.70. Now to get there, we would break every major moving averages that we've got. 3, 10, 20, 50, 200, the entire gambit. Your guess is as good as mine. But I think we're going to need some real heavy negative news to get that sort of reaction. And what's more likely is that we get a pullback to the 786 area with a little bit of an overshoot, because that would get us back down to the 10 basically. And the 10 is a really good reset for another leg higher. So make no mistake about it, at some point we are going to get a higher low. That's not theory. I'm not guessing or assuming. I'm telling you, we will get it at some point. I don't know when, and neither do you, right? But we know it's going to happen because it has to happen. Don't mistake that pullback as some deep dive back down to the lows, because we don't know that it's going to do that. Maybe it will, but I wouldn't count on it. Today's floor pivot is higher than yesterday. That's bullish. Price opened underneath it. That's bearish. They kind of cancel each other out. We had multiple consecutive consistent missed daily pivots last week. A lot of them, right? But I mean, you've seen it. Repeat, single color run all the way up. Well, now we have an MDP so far, and we're underneath it. Now, it won't count until the end of the day. We got to make it all day without hitting it. But so far, we haven't hit it. We did manage to finally get inside the channel after tagging it multiple times. We got in there. We still haven't quite got to that floor pivot yet, but if we can get to the pivot, then we can get through it. We can challenge the pivot top, and then Friday's close, and then Friday's high. Not really a lot of revelation there, right? The other way around, we have the weekly floor pivot down here. Now, these pivot channels are supposed to give us a little bit of insight on the probability of a breakout. Well, this is a weekly channel, so it's talking about a weekly candle, right? So just go out to a weekly for a moment. This is last week's candle, and as you can imagine, it's a big old booger. So that really large weekly channel is suggesting that it's very unlikely we break out of last week's range. And then if we do actually break out of it, that it won't stick and that we'll end up coming back inside the range again. Just keep in mind that these pivots and these channels, they don't make price do anything. So just because it's wide, it won't stop us from breaking out. And if we did actually break out, it won't make us come back in again. It's just there to help us anticipate what price is more likely to do. And this really wide floor pivot channel on the weekly suggests that even if we do get a breakout, that breakout likely won't stick. And to the downside, we would have to go all the way down below 67.67 and then break out underneath that before we would finally get outside of last week's low. It's quite a ways off. Just getting there would be a feat of nature. So to the downside this morning, if we can break 7,100, which is the floor pivot weekly channel top, then we can challenge the Globex low, Friday's low, and then the weekly floor pivot. So we got things to the upside and we got things to the downside. From a target standpoint, we've certainly got a lot of them. S1 70.97 and R1 72.08. They're pretty far apart. Now, the path of least resistance is showing pretty clear this morning. It's the distance between this daily floor pivot and S1. You can see it's not that too far away. And then we got R1 up here versus that floor pivot, and that's farther away. Path of least resistance suggests it's easier for the market to go up than down because we've got more room to the upside than the downside. But again, that's math. It's not based on anything other than yesterday's price action. And it has no bearing on what price can do. It's just there to help us try to anticipate what it could do. Now we've already reached S1. We did that on the gap down last night. And there is a market logic that says if S1, then R2. And funny enough, that kind of logic comes into play when you've had a market on the run and then it pulls back. Pulls back to an S1 and then continues on to an R2. This is the type of scenario that it was meant for, that it was built for. So don't be surprised if we S1 to R2 today. R2, 72.52. All right, we left a little bit of work out here on Friday. So that's going to be a level that we have to fight through today. It's basically the last hour or so, right? This area from Friday above 71.50 and into the high up there, 71.85. So 35 points. That's going to be a significant level to struggle against. But we got to get there first. I mean, just getting to 71.50 would be a feat. Then getting to Friday's close, and then above that to Friday's high. We've got a lot of footprints up here. Now to the downside, if we can break our Globex low, we got the point of control from last week. That ought to provide a little bit of structure, and it's in front of 70.50. So it's like defending the 70.50 level. I agree with you. It should be a national holiday. It is 420. I didn't notice. I mean, I noticed, but it didn't register. It's a good one. If we do break 70.50, we got the 7,000 level. 69.50 doesn't really have any footprint. It's kind of a surprise because we've been running 50s. And then 68.50, a long ways down. So from 70.50 to 68.50. I mean, it's kind of thin. 7,000 has a little bit of footprint, but we haven't really been running roundies. I'll take it though, just to narrow the field a little bit. 150 points from 7,000 to 68.50. That's good enough for me. $10-day, 30-minute volume profile and TPO. We're going to lose the last little bit by Wednesday. That should narrow us up quite a bit. The profile looks a lot better when we get rid of that junk down there. But we got to get there first. We're looking to see things tighten up to 6,800 by Thursday if we don't break down below 6,800. That's kind of the line in the sand at the moment if we want to clean up this profile. Now, other than that, the point of control, we left that a long ways off. We're not going to get into those candles until near the end of the week. By Friday or even Monday the following week, right? We're talking about 7 days from now before we get into the candles that are making up the current point of control down here. So if we want to see this thing move, we're going to have to put the work in up here. Otherwise, if we start to break down, it's a long ways off, 68.50. It's the same level we were looking at on the other charts, 68.50. We got some footprints out here, but I don't think it would be enough if the negative news comes in hot enough. We'll just punch through all that stuff. We got a new VPOC from Friday. This one now over our head. 71.63-ish. I don't zoom in and get it to the tick perfect. If you want to do that, you do it. So now we got one above, one below, one from Thursday, one from Friday. We're kind of trapped or pinched inside those. If we break it, we've got a level of interest at 7,000, but that one should already be on your radar since it's just a big options level anyways. And then below that, we got nothing until, golly gee, imagine that, 68.50. Who'd have thunk? Now, last week, we looked at the upcoming week's range and measured it against the range that we had at the time, and there wasn't much of a revelation to it. And that's sometimes just the way it goes. If the range is extra narrow, that gives us some insight, or if it's really big, that would give us some insight. But the range is just a little bit smaller than our week last week, and that doesn't really offer us much value at all. So thanks, but no thanks, right? There's just really nothing there. I'll take it when we can get it, but just sometimes there's just nothing there. So that's not helpful. We're closer to 2% than we are the 3% level. when we consider how far away from the 10-day moving average we are. 2% is still running hot. There's nothing wrong with 2%, except that it doesn't owe us anything. So, when we get to 3 or even 3.5% above the 10-day, we're running too hot. It owes us a pullback, or at least a good stall into the rest of the day. But at 2%, we're just running hot, but not hot enough. It's not overbought. It's not overextended. It does not owe us a pullback. It already has. 2% is not enough. So if we move 1.5% to the upside today, yeah, that could do it. But we're down 0.3. So now we would have to take back 0.3 and then go another 1.5 on top of that to the upside. That's going to take some serious bullish bias. And looking at our distance from the 10-week, yeah, we're still running hot here too, but not hot enough to cause a significant pullback just because it owes us one. You can see where we were at last week, plus 5.25%. We're not even above 4 now. Looking at the history, we are just about at the high point of what would be considered enough. This is typically where we stall out, we pause, take a breath, and pull back. Now, this is for the week, so that pullback doesn't have to happen today. In fact, all we have to do is sit here all week. Don't go down, don't go up, just kind of hang out for a week, a doji bar. And that 10-week will move up to us even closer next week. That's why a lot of these only lasted a week. And then the 10 moved up. It got closer to us and it removed that large distance. So a move from here to the upside still looks like about 1.25, maybe 1.5, and then we would be stretching the boundaries of what's acceptable. That lines up with what we had on the daily. If the S&P gets above to the upside today, more than 1.25, at the most 1.5, then we're going to be overbought, overextended, and we will be looking for some mean reversion. What's going to be the catalyst for that sort of bullish bias today? I have no idea. But it would probably take something pretty juicy. All right, looking at what's moving around, Bitcoin's down, jets, uranium, gold miners, junior miners, cloud computing, uranium, China, Mag 7, technology, consumer discretionary, chips, generic tech, financials. Oh my goodness, everything is down. The three sectors that we would want to see or need to have for a market breadth rally day, we don't have them. And they're down significantly. On the plus side, that'll be really easy to spot if they flip over, right? I mean, if we're going to go from a -4 to a plus anything, that'll be pretty easy to spot. The problem is they're not what's moving the market right now. Their influence is blocked or shunted by the influence of the VIX and crude and treasuries. So they have to kind of take a back seat. I think they're just sharing that Uber ride. Now, looking at what's up this morning, there really isn't anything up this morning. Energy, yay, and the VIX. That's it. So we got nothing. We got the VIX breaking down below 19.5. It didn't quite get to 20, or if it did, then it stopped just right there. Yeah, it missed it by a couple of pennies, maybe one, one or two pennies. That's not much. So that's the line in the sand right now for things to get uglier, is for the VIX to rise above that $20. Otherwise, as long as it's still trying to set lower highs and lower lows and continues to try to break down, that should calm things down a little bit. It's hard to see the S&P rally today with the VIX above even $19, let alone 18.5. It's like swag levels, right? Just because the VIX is going down doesn't immediately mean that the S&P is going to continue to rally. Going down isn't going to be enough. It's going to need to break particular levels and get below those if we want to see a sustained move in the S&P and the Nasdaq. Right now, that swag level would be 19 as a good starting point, or 18.5. 1920 comes to mind, right? That's a historic level, that 1920. It's no joke. So I think that 1920 is probably the best swag level you could add right now. You know, SWAG, right? Swag. Scientific, wild ass guess. Swag. I didn't make that up, by the way. It's not mine. $19.20. If we get below 19.20, we got an opportunity to continue to push higher in the indices. Otherwise, if we hold above 19.20 and we just stabilize there, the market can hold its own. I just really find it hard to believe we'd be able to rally up. Spot up, ball up is a thing, so it's possible. I don't want to say we can't do it. It is very simple, and it usually is. GTFO, get out of this box to get anything else done. If we stay inside this range today, you're probably not going to enjoy the trading day all that much. It's possible. The range is big enough, so you could, but it's very likely going to be choppy, violent, nasty. You're probably not going to like it. So get outside of that box first. To the upside, we got this gap to close. And looking at the volume profile, we know that this zone up here has a very large footprint to it. Anything above 71.50 is going to be a fist fight all the way up to the ADR half, which are really close to Friday's close. They might as well just be interchangeable. And then Friday's high, and then the full ADR up there. But it's gonna need a lot of fuel. To the downside, it's a lot easier to envision. Break the Globex low, challenge Friday's low, then you get to the lower ADR, which lines up kind of close to Thursday's low. But the volume profile for Thursday was pretty solid too, right? And we have that point of control down there. That's what I got for you guys. Be careful, be safe, watch the clock. I'll see y'all tomorrow.